Hi, folks. Denver Dyer, the financial advisor with LPL Financial. I thought I'd do a little quick video to give you an update on the market. Had a little bit of volatility lately, but at the end of the day, we don't think this is anything to be concerned about. In fact, I've got some notes here, and one of the reasons I love working with LPL Financial is the amount of research that they put out for clients and I to go through and to learn from, and to help us kind of keep things in perspective when markets are a little bit shaky, like they have been lately. So first off, we're down 10%, which sounds like a lot, but in the grand scheme of things, it's really not that significant. In fact, we've had multiple 10% corrections in the last couple of years. The most recent one we had was in July. Market came down almost 10%, and then we had a really nice rally for the third and fourth quarters of last year. By the way, that 10% number takes us back to about mid-October of 2024 on the S&P 500. So not a crazy move to the downside. In fact, Jeffrey Buckbinder with our certified financial analyst with LPL says that these 10 to 19% corrections are often followed by double-digit rallies within 3 months on average and gains more than 80% of the time. So this is not completely unheard of. I do understand that volatility can be a bit unnerving, particularly if you're retired and living off the income that your investments are producing. However, if you are slightly more risk tolerant, this may be a time to put some money to work. A couple things are happening here. Number one, we had a really good bump in the stock market in November and December from what analysts and pundits are calling the Trump trade. Happy to have that election behind us. Now, it doesn't matter whether you like Trump or hate Trump, and I find that people typically fall in one of those two camps. What we learned from Trump 1.0 is that we're likely to get a much better business climate out of this administration than the previous administration. A couple of reasons for that. The 2020 or the Trump 1.0 tax cuts are not going to sunset in 2025 like we thought they were going to, provided we got a different administration in office. Additionally, there's going to be less regulations, as we learned from Trump 1.0. He's going to make the cost and the ease of doing business easier for everyone involved. And so that means less permits, less regulations, fewer hoops to jump through for companies to expand and to invest in growing their operations. The other thing is that Trump 2.0 is talking about another round of tax cuts. If he can, pardon me, my allergies are making my voice scratchy, but if we get another round of tax cuts, what we learned from the first round of tax cuts, Trump 1.0 cuts, is that corporations were some of the largest benefactors from those tax cuts. So we expect that if you can get it through Congress, to get another tax cut bill at some point, and we expect corporations to be significant benefactors of that round of tax cuts as well. So a couple things to keep in mind here. This is not an abnormal move lower. This is a standard drawdown market correction, if you will, that we experience all day, every day, almost. And we are entering the third year of a bull market. And so what we find is typically we're going to have a less accelerated growth of the stock market and the overall indices. But Fidelity and Goldman are telling us we're going to probably see about a 10% rise in the market this year. In fact, our analysts at LPL are predicting a 6,300 S&P 500. I'm having problems finding that in my notes here, but that's just 14% higher from where we are. So while it may be unnerving to see, triple digit down days, 700, 800, 900 points, in fact, we are on the positive, moving the market's moving to the positive today. S&P 500 and the NASDAQ are both up. Good to see that. The NASDAQ has been getting beaten down pretty significantly, and I know we've got some investors that are holding some high growth stocks that are in that index. So nothing to be alarmed about. If you feel that the volatility you're experiencing is not what you'd expect or something that you want to be taken care of, give me a call. If we haven't talked already, we certainly can. I know some of the more risk-sensitive clients and I have already spoken about this, and we made a few adjustments, nothing major. But this is just a part of doing business. So again, if you are a little more risk tolerant, this might be a buying opportunity. Might be a chance to put some cash to work that you've got on the sidelines. and and a good opportunity to buy in at lower rates. The market was getting pretty frothy, we call it, in terms of the levels it was rising to. So this is a good thing. Typically leads to creating a bit of a foundation from which the market can move higher. So I'm Denver Dyer. If you don't have a financial advisor that's taking care of you and talking about things like this in down markets, maybe you should give me a call. Let's talk about it. Hope all is well. Call if I can help. See you soon.